This is the Local Real Estate Developer Podcast, where we share the stories of locals across the country who took that empty lot or that old building and turned it into something awesome that their community needs. I'm Kristi Kandel, and I've been a real estate developer my entire career. My co-host Raphael is a commercial broker, and together we're sharing the stories of locals making a huge impact on their communities. And what we've learned is you don't need millions in the bank or decades of experience to get started. You just need the confidence, tools, and the right people around you. This podcast is your chance to gain the confidence to get in the game, because real estate development isn't just for the insiders anymore. It's for people like you too.
Welcome to the Local Real Estate Developer Podcast. I'm your co-host, Raphael and Kristi. I'm an investor, broker, and developer located here in Louisville, Kentucky. And I'm always happy to be here with my co-host, Kristi Kandel. Great to see you as always.
Hey, yeah, great to see you. I am also a real estate developer, investor, and teach locals how to become developers in their own community. And I split my time between Southwest Florida and Lake Tahoe. And part of the reason that's relevant is today we want to give our audience some background on who we are and how we got to where we're at now. Because we were talking offline a little bit, and we both have some really cool projects going on both across the country and some overseas. And so we just wanted to give some background of how we started, because I think it's very relevant to go, like, we're literally just normal people like you guys, and we have become developers in our own communities, and it's very possible for you too.
Yeah. No, absolutely. I couldn't agree more. I mean, I think you and I are both in the same boat in the sense that we didn't come from this business. I think we kind of fell into it, as many people do. And for you and for me as well, it was a windy road to getting to where we ended up going to. And so I think it's good to provide that as context. And, you know, to give you my background, and as you know, I went to school for engineering and got into the software development space, and I worked in a company implementing software systems for government agencies from 2014 to roughly 2019 when I jumped into brokerage. And I had always, not necessarily always, but, you know, I think everyone got into the idea of investing in real estate through bigger pockets. It was very popular, particularly in the early to mid 2010. And so I started devouring all that content, and as I was moving around to different parts of the country and the world, I always had aspirations to get into real estate. In fact, the first property I wanted to buy was actually when I was living in San Juan, Puerto Rico. I was actually looking at a house or an apartment in San Juan, and I was planning to. It was a 4-bedroom apartment, and I was planning to rent it out to people as I lived there. And ultimately, I didn't end up pulling the trigger. But then when I moved to Louisville, I got the opportunity to buy a 4-plex, and I house hacked it. So I lived in one of the units and rented out the other 3. And I did that for a little while, and that's what actually gave me the courage to jump into brokerage full-time, because I was making well over 6 figures in my previous career, and I think my first year in brokerage I made $13,000. So it was definitely a shock.
I'm curious on the very first property where you could have rented the rooms. What was it that made you not pull the trigger on that one?
It was fear, I think. I had some money saved up, but you know, the apartment at the time was, I think they were asking $350 for it, and rates were around 6%. So my mortgage payment was going to be like $2,800 a month, and I was paying $1,100 a month at the time. And I was like, man, I'm going to raise my living expenses by another $1,700, and that doesn't factor in the idea that if anything goes wrong, I got to cover it. And I didn't know definitively if I could find people to rent the space. I figured I'd ask people that I was working with, but even then, it would be a little bit of a challenge to fill the rooms, and so I just kind of got scared. But, you know, looking back now, if I'd bought that same apartment, it would be worth almost double what it is today. So,
and mostly I had a feeling that was it, but so many times, and there was a couple properties I had looked at before getting my first 2. It's like, it's almost, you just got to go through the reps of at least getting almost there, and then not to go, okay, well, but at least you tried. So then the next time you got a little bit further and a little bit further, and then it goes, oh, okay, well now, you know, you have the confidence to keep going, which honestly is the overall theme of our overall pod and everything we're doing, is that this is a mental game of having the courage to go forward when the path is not clear.
Yeah. Well, tell us a little bit about, you know, your first project. And I think another thing to keep in mind too, which is something I'm sure you went through as well, is that sometimes, I was in this mindset myself too, and it took me a little while to get out of it. It's always fun to dream about what you can do in the space, right? But until you actually do it and put pen to paper, like, for example, when I first made my offer on this 4-plex, like, when it actually got executed, I was sweating bullets. I was like, "Oh my god, I'm about to sign up for." I think we bought it for 280,000 when we bought it, and I was just like, "Oh my god, I'm gonna have a debt of that much money." To me, it was just inconceivable. But having put pen to paper and going through that process and ultimately getting to the finish line, obviously you learn from that experience. So tell us a little bit about maybe your first endeavor and some of the lessons you learned through that process.
Yeah, the very first property I went to spend my own money on actually was a house hack as well. My CPA told me I needed to not pay as much taxes. I needed to get some real estate. And to me, I had grown up in a very small town in Ohio, and one, people like us didn't have the money to own property, so it just wasn't even an option. And two, I was like, wait, but if I buy a physical property, I am tied down. I have roots that are super deep and I can never leave. And so that felt terrifying. So for me, that was my other portion of the mental battle, was thinking I would be trapped there. Now, knowing all the strategies I know now, that's not even remotely the case between long-term, short-term, mid-term rentals, value add, and then selling. There's so many options there. But the very first property was one where it did take a six-figure chunk of change, but like you, I had a very high-paying job, and I was at the handcuffs part because I was working for real estate developers. But outside of investing a tiny bit in my 401k, I wasn't doing anything from an investment standpoint. I was just living a good life in my early 20s, just going, yep. So pulling the trigger and going through the mortgage process, that one was interesting for me because I had never gotten a loan like that before. And we grew up where debt was bad. And it actually took me 3 lenders to get one, because where it was at in Lake Tahoe, it was in a high fire area in an HOA. And it actually took searching through and finding the right lender who understood the whole market and went, oh yeah, we'll get that. So that was an interesting hurdle in itself. But then at the same time, I started to understand the area that was there, and I had gotten a dog. And so I realized I needed a fenced in backyard. So I sent a mailer out to the community across Highway 50 and ended up getting both a single family home and a fourplex to want to sell to me. And having bought that first townhome, and then I ended up remodeling that one. So I started to get used to contractors and what that was from a residential standpoint. And I realized, well, it's very similar to what I've done on the commercial side with managing like full ground up new construction projects. So that part didn't scare me at all. So when the single family house came up across the street that needed completely gutted and renovated, I was like, okay, I got this. When the fourplex came up though, and now I have people living in it, and he wanted to sell it as is, that terrified me to my core. I was like, you want me to buy a building as is that was built, I don't know, in the 60s or 70s? There's plumbing in the walls, there's electrical in the walls. I don't know about the foundation. Like, I was literally terrified. And I was going in with a partner who I had invested with in something else before. And he was 20 years older. And he's like, dude, just because it says as is doesn't mean that we don't get in and do an inspection and we don't go, nah, we don't want it. Or we don't say, hey, this came up. I know you said as is, but we're not going to move forward unless X, Y, or Z. He's like, there's all sorts of conversations that can still be had. As is not the final. It's just they don't want they want you to know they're not going to be in this little back and forth nickel and diming. I'm like, okay, I don't know about this. So that one gave me, I just remember sweating bullets on that one because that was a $540,000 purchase. And it also took us many lenders to find one who would only require 15% down because money didn't grow on trees. Like, eventually at some point, everyone investing runs out. So that one we got to find a lender that was in the Mountain West, and then also just going through the as is part. And I think it was those first handful of my own deals with all of my own money in them that made me go, this is all this is? Like, I made this so much scarier and bigger than it needed to be. And when you're using other people's money on our other development deals, other people's money meaning the developers I was working for, it didn't seem as scary. But when everything you have is on the line, it was like,
Yeah.
ooh.
Yeah, it makes it real when your money's going out, and I think owning real estate, you start realizing how operationally heavy it can be at times. And so but again, that's part of the business. And as you start to learn about that, then you say, okay, well, now that I know this could happen, let me see if I can build systems and processes to address this so it's not going to be as big of an issue going forward. But you don't know until you actually dive into it. I mean, that in your case, owning that townhome and probably having to manage the tenants and then having the single family home renovation project. I'm not sure if you held that long term or you decided to flip it.
That one I still have. All of my Tahoe properties print money. So
I bet.
those
I
I
mean,
still
now
have.
and that was when you buy those now? It was about 10 years ago, maybe?
2017 and 2018.
Well, yeah, it's great. It's almost 10
Yeah.
years. Isn't that wild?
Yeah.
But yeah, so but you've had those for a while, and now they're doing really well and cash flowing, and I'm sure they're worth a lot more than what you paid for them back in 20.
They're both worth 3 times that, and probably in the next 5 years, they'll probably double again. I bought in areas that were turning, and we had a whole bunch of big things happen. And now once the hospital gets built and finished, it'll be another to where, honestly, I guess the theme that everyone says is it's just get in the game because you will win. You won't win fast at real estate. It'll be a longer game, but just get in the game and try because there's so much opportunity and potential. Which on systems and processes for yours, did you self-manage your first couple when you were trying to
Yeah.
bootstrap it? And yeah.
Yeah, I didn't have the money to outsource. A lot you have to kind of maintain, especially early in the business. I mean, as I said before, I made 13,000 my first year. The second year wasn't all that much better. I probably made about 40. And when I say make 13,000, I mean that's the gross. That you've got expenses with that as well. So frankly, I probably made no money, but I had savings, and luckily, my wife, who was my girlfriend at the time, she had a job as well, so she helped contribute a little bit to the maintenance of the property and everything. But yeah, the first year, I mean, and really the first 2 years, I was living pretty much off savings, and I got into a little bit of debt by the end of the second year. So the third year, I started hitting. I think I hit 70 or 75 gross, and so I was able to pay off a little bit of that. And then the fourth year, I almost tripled it, and so I've started stacking some cash and saving up. And at the end of that fourth year, going into the fifth year is really when I started to seriously look for investments in commercial. And luckily a friend of mine who is a wholesaler in town had brought in a commercial opportunity. Well, it was a residential property that was zoned office residential that was in a growing commercial area, and he presented to me. He said, "Hey, what do you think about this? And like, what do you think is the highest and best use for this property is?" And we did some research, and I was like, "Yeah, I mean this is definitely more of a commercial corridor. It would probably be beneficial to rezone this property." And he asked me, he's like, "Hey, you want to go in on this 50-50?" I said, "Sure, let's do it." And that's essentially how it started. And I took the property through the rezoning process because through my experience having been a broker and having gone through it myself on another project that we were working on, I was pretty familiar with how it worked, and I knew this particular corridor was not going to be there very contentious as far as a rezone. And so brought it through the process, saved 10 grand in the process, and went about also trying to identify tenants to occupy the space. And I just did a presentation recently about this. I did like a case study on this particular investment, and I talked about some of the risks of investing in commercial real estate, and that a lot of it, commercial properties can sit vacant for a while. And so that's one thing that you kind of have to consider. And then also the fact that there are costs associated with building out a space that are going to be higher typically in commercial than residential. But again, the value of investing in commercial real estate specifically was that a lot of it is driven, especially for investment property, it's driven by the income it produces. So if you have a property that's producing X income and then a property right next door that's producing 2X income, most likely that second property is going to be worth more. And so we ended up identifying a tenant that ultimately took the space. They performed their own build out, so we didn't have to come out of pocket on anything. And ultimately they are now occupying the space. We actually were present on site, so you've seen the building, and the tenant's doing really well, and that building's probably worth over 1.5 times what we paid for it within a year and a half period. So that was the first kind of case study, and now we're actively working on our next project. And so it's to your point regarding that compounding effect, because that first property gets you in, you start getting your feet wet, then you start the next project, and then you start having case studies where it's like, oh, well, I did this. This is how we accomplished what we did. Ultimately, we're going to go apply it into the future. And as you start getting into partnerships or starting to raise money, it makes it a lot easier as a conversation because you have that track record. And you don't have to know everything. I think as well as I do, that we don't know everything. In fact, we may have a very narrow window of understanding about different verticals, but we just know that the people that we can connect with that will fill the gaps where needed.
Right. It's understanding, okay, well, I want to look at this area, this type of project, and maybe I'm a mixed use, maybe I'm a multifamily developer, but I want to get into industrial flex space. Okay, great. It means going and finding the architects, the engineers, the contractors, and the lenders who understand that space and go, okay, here's what we want to do. And then they help get you educated on making sure that you're making those right decisions and purchases. Yeah. And I think it's just even the evolution of where you got into, it's not going in on something big overnight. It's understanding your market, your area, and going, hey, I know this community. I know this building. Like, I remember when you first told me about this, everything you said was a slam dunk because you understood as a broker what the other buildings on the street were selling for. You understood the potential and all of that. And I was like, that's a no-brainer. Like, that's a deal that works all day long, and you now have the confidence to go do it because you know the market, because you've already done some deals.
Well, to your point too. I mean, if this deal didn't go great, it wouldn't have killed us. I mean, we bought it for 370, and we put I think 20 into it, each of it, like together. So, the building was vacant for about 4 months after closing, so we had carrying costs. We each had to come out of pocket maybe $1,200 a month or $1,300 a month when you factor everything in. But again,
well, and let's double click on this. You just said you bought a commercial building, so commercial development, and you didn't spend millions of dollars.
No, none of our projects have been the acquisition price now. I mean, have been below $500,000. So with partners, I mean, it's very achievable. Even if the building sits vacant for 6 months, God forbid. I mean, yes, you're bleeding some money every month, and you want to factor that into your analysis, but it's not going to cripple you. Whereas if you take on massive projects and you have a massive monthly nut, then obviously there's a lot more risk involved. But worst case scenario, we were able to buy this building. It appraised for more than we bought it for. So even if we had a fire sale and we sold it for a $20,000 loss, each of us would have lost 10 grand. Yes, that sucks. It's not, you don't want to ever lose money, but I mean, that's tuition, And
Exactly.
we were very confident in the thesis, but the reason why we were was because the experience we had in the space. And I think the precursor to investment should be education. But at some point, once you do get educated, it's about taking that chance.
Rolling up your sleeves and taking action. Yeah. Exactly.
And you could take risks that aren't going to cripple you.
Yes.
Right?
You don't have to take the death blow ones.
Yeah. I mean, in worst case scenario, on the first couple projects you did, I'm sure even if things didn't go exactly as planned, you could have gotten out of them. You could have sold them, and you maybe would have lost a little bit of money. But even then, I don't know, because Tahoe seems to be a market that was growing. So
yeah, it's very rare that in real estate you go to zero. You can start, hey, can we chat for a second? Since you're listening to this podcast, you're already thinking like a developer. You see the potential in your community, and you're ready to do more than just watch from the sidelines. That's exactly why we created the Local Developer Vault. It's a free resource full of tools, templates, and trainings to help you take action. And here's the best part. When you sign up, you'll also get access to our local real estate developer community. It's full of people just like you who are making real things happen in their neighborhoods. So don't just listen to the stories. Become the next one that we spotlight on our show. The link in the show notes to unlock the vault and join our movement. And I start multiple businesses. There are multiple businesses that never get positive. And there's so many ways that you can lose in others, to where with real estate, at least to me, I like it because it's very hard to go to zero. And just going to the pricing in your community, the one thing I like to share is that we have 16,000 communities in the United States that have a population of less than 10,000 people. If you can flip a house, you can take that commercial downtown building just like you did, and you can turn that into something that is revitalized and repurposed and works for today's tenants and today's needs. And I'm just, that's why we have the podcast. It's why we're having the meetup. It's because local development is not millions of dollars. It doesn't mean that you came from a development family or that you have all these crazy internal connections. It's that you have the unique advantage and ability that you live there and you know what is needed. And you knew that there was probably going to be some really good tenants that you could plug in on a building that you already bought for a great price. And it's, yes, there's risk, but there's risk in everything in life.
Mm-hmm. Yeah, it's calculated risk is really what you're taking. And to your point regarding real estate, I mean, you really I mean, if you do it right, you shouldn't ever be in a position. Well, I don't want to say this, but it's harder to be in a position where you lose everything if you do it cautiously but proactively. So, yeah. I mean,
and people like to look at us like we're very, like, we have we take a lot of risk in this or that, but I would say we are probably some of the more conservative people out there, to where, yes, we're willing to do it, but there's a lot that goes into it. So speaking of today, so we've started, smaller house hacks, fix and flips, those things. Now we're into commercial projects. What do you have that you guys are looking at in your market now that you've gone, oh, okay, we've done this, we've done that, we've built up a business pipe to where we've got the cash coming in and the partners we want to work with? What are you guys looking at doing?
Yeah, so I mean, we've got a couple active projects right now that we're working through, which we're really excited about, and obviously it's going to be really cool once we can share more information about some of the ones that we're looking at. But the next step is to involve others as far as capital is concerned, because historically all of our projects have been just partnerships and each individual partner coming to the table with their own cash essentially. So we don't have outside investors. It's just myself and my business partners on these deals. And typically it's two people on the deals. So I own 50% of all the projects that I'm working on. Then I have other business partners for those other projects. But what we're facing, similar to probably what you faced in the past, is that at a certain point you just run out of money. You can make an unlimited amount of not, you can make a lot of money, but at the end of the day, like you're just going to run out of the flow of cash. So we're at that point now where we're starting to involve other people to take on different projects. We're looking at an office building right now. It's going to be an 18,000 square foot building, more stabilized investment property. Not necessarily super heavy value add, but there's definitely some upsides in rents. We've looked at a building that could potentially be converted for a Airbnb type of community complex. It's an existing structure. It used to be an old theater, but was converted into. It's a really cool building. It was converted into apartments,
Okay.
but we can potentially add a second floor and then incorporate more units and make it into a really cool development or community. And again, the zoning supports it. That's why the zoning is really good for what we're trying to accomplish there. So that's one we're considering. The price point's off right now, but we're making our progress there. And yeah, I mean, again, I'm big into adaptive reuse, like you are. Like if we can take cool buildings that are properly entitled and turn them into something that's productive, and we can get it at the right basis, and maybe incorporate some credits through historic tax credits, et cetera, then that's the next couple projects we'd
Hmm.
like to take on, because Louisville specifically has a lot of unique unique building stock, and so if we can recapture some of that and turn it into something cool, I think that would be an exciting proposition for us. And I'm sure there's other people in other communities that probably have similar stock that they can capitalize on.
Yeah. Yeah, for sure. I mean, so many times people go, "Oh, stop taking away our green space, the big bad developer." And it's like, yeah, there actually are really cool buildings and spaces, and there's going to be different hair, and you're going to open up the walls or have this, or there might be something structural, but run the numbers and get it right, and it can be a really cool addition to your community to take something like, to me, that's it's like an art project that you have with real estate, to where it's like, hey, that building has been vacant for how long, and all of a sudden you breathe new life into it, and not only do you, the developer and investor, win, but now you have tenants who have businesses that run inside. They have employees who are now making money as a result of this. You have more tax dollars that are flowing into the city. You have customers who now have somewhere new to go and be at, and it's just like the impact and the ripple effect that can have. And then because you took action, how many other people, maybe even next door, said, well, I'm going to give mine a facelift too. Or maybe someone else who's been looking at you goes, well, if Raphael can do it, I probably can do it too. And then they take action on another building a couple blocks away, and you start to feel that ripple effect. And then that's where real estate being a longer game, you do need to wait longer, especially in the smaller towns. It's probably going to take you closer to 7 to 10 years to see the true value add and the real dollars and go, oh, there we go. But the more people you get involved in, the more that goes, the more you're all going to win as a community together.
Yeah, absolutely. And regarding some of the stuff you're working on, I guess what is the next phase of the project? And I know you've had a lot of really cool milestones just recently, and you're really pushing forward on something pretty big. So
Yeah. We've got two big things. One is Elevate Southwest Florida and St. Pete, which that is our missing third space in our community that I'll
Mhm.
go into. We also got rid of a lot of our smaller properties, and because we had built really good hospitality businesses around short-term and mid-term rentals, and now we're at the point where we wanted to consolidate. We wanted to get out of certain markets, so we sold those assets. And I got a message last week that potentially, because we've been very much into the health and wellness and the boutique hotel space, there's potential for a hotel in Spain. Now
Mhm.
it's super early and we're
Super
evaluating,
early, yeah.
but the partners that I have in this know the area incredibly well, have a resource, a whole network of people, to where it's Yeah, it's another country. Yeah, that'll be new investing for us, but it's completely doable. Like it's clear to see a path towards putting the pieces in place and making it happen. So that one I want to do for so many reasons. And I'm like, we're gonna learn so much as a result of this. And it's such a cool, fun project that it's exciting to think about. And then with Elevate Southwest Florida, that's one that we got open, our phase one open in June. It's gonna end up being probably 15 to 20 acres. And the coolest part is, so we've been open 2 months. We've already hosted several community events, both free, and we had our first huge tournament where we threw a pickleball, volleyball tournament, had vendors and everything out, and it was incredible. And just my favorite part, so last night we had our Sunday night basketball league. So we have 8 teams that play on the Sunday night league, and just talking to the different guys who are literally coming from all over Southwest Florida. Some people are driving an hour to get there. And it's not that they can't go play at the Y, they can't go play at LA Fitness, but they're like, we don't like the attitude or the people, or if we're at the park, we don't like the crackhead right beside us. And it's not quite our vibe of, where we want to be healthy and happy and active. And they're like, you guys just seemed different, because our whole saying is Elevate Southwest Florida is built by locals for locals with locals. So we are literally creating something with the community. And it's been so much fun to see people say, hey, I was looking and searching for something like this. I just moved to the area. This is so incredible that we have this to come to. Because while you could build pickleball courts, or you could build beach volleyball courts or whatnot, you still then have to plan the games. You still have to go, I got to round up 5 to 10 more people to come actually play and make this happen. And so that's part of the friction we're reducing. But the bigger picture of this is that this is a monstrosity of a project. It's probably 5 to 6 years, 3 phases, 140 million. And no, that money doesn't just grow on trees. It's not sitting in my bank account. It's purposely a complex capital stack. And all that means is all the money that it goes to take, both the debt and the equity, is going to be super complicated. We'll do a portion of it, which is standard capital raising from accredited investors. So just people who are considered accredited, and they can invest into your projects. We also have a crowdfunding platform through local real estate developers that we can turn on, so that way the community can invest in, and so they can put in $500 or $5,000 and be part of that, because a lot of times a lot of the community is left out because they're not accredited. And then another component being the nonprofit or the public-private partnership part, because once it's all said and done and it's built, it'll have a wellness building, indoor sports building, food park, dog park, walking trails, outdoor sports bar, all this stuff. And so it'll be based on membership tiers, but we want the community, the Southwest Florida community, to be able to come to it regardless. We don't want a $50 membership to hold them out. So by adding in that layer of public-private partnership or nonprofit level, that will allow us to let the locals be part of that no matter what, and not let money keep them out. So part of, we just met with a local group an hour ago who has entrepreneurs that they're teaching and getting kind of out there. And we're like, great, come to our once a month, we have a free Saturday morning event. We're like, have them throw up their tents, and they can be vendors at this thing, and they can sell their lemonade, they can sell their whatever their business is, and give them a spot just to be entrepreneurs in the community. And then so it's being able to do things like that and be flexible to go, no, we want this to be something cool and amazing for everyone in the community. So it's with that project, we are sprinting marathons, and sometimes it hits you like a ton of bricks, and sometimes you feel like you're flying, and it's all great, and that's just all part of it.
Well, you're making I mean, that's the thing. I think that everyone, regardless of what you take on, is that it's all about the next step. And yes, you can have this big idea and a grandiose plan, but the most important thing is the next step. Like, okay, yes, there's a $140 million project, but the next step is to do this event next week, and how we're going to get the vendors there, and all these other things. Great. Next step. What's the next step? What's the next step? What's the next step? And you
And
have a
just
phased
taking
approach.
those bite-sized chunks to go,
Yeah.
yep.
And then you look back after a year and a half or two, and you're like, oh wow, who would have thought that we could have got where we're at? But all that matters is just that one next step. And I think it's kind of serendipitous in the sense that, obviously this is all these decisions, all these people that you've met, all the things that you've decided to take on have led you to where you're at today, and ultimately doing what you're doing. And I'm really excited to continue to follow along with what you're doing. And I mean, one of the reasons why you started local real estate developers was to create this movement of people to get inspired to take on their first real estate development projects, and hopefully change their communities for the better. And that's one of the reasons why we coordinated this conference we're hosting at the end of this month. So you want to talk a little bit about what we're trying to do with the conference, and ultimately how we're going to continue to build this over time so that it becomes one of the if not the top networking opportunity and community building effort for real estate developers.
Yeah, and I mean, so we're holding it August 27th through the 29th, and we're literally bringing in people from across the country who are doing great things in their community. And the whole purpose is like we'll have these conversations with them offline, and we'll be talking about our projects and go, "Oh, I hit this roadblock," and they'll be like, "Oh, I hit this here and I actually tried X, Y, or Z." Because it's not about knowing everything in development. It's knowing you got to phone a friend. You've got a person that you can go to, you can talk to and go, "Hey, here's this challenge. Like, let's just talk it out." With someone who doesn't have skin in the game, who doesn't have anything to where they can be that true impartial third party, but have the knowledge and experience to go, "I've been where you're at, and here are ways and avenues you could solve it." So that's the part that I'm most excited about, because it doesn't matter if you've done development for 20 years or if you've done development for a year. There's all sorts of different perspectives and angles, and every community is unique, but also very similar at the same time. So yeah, I'm very excited to get these people in the room together, and also to do it in your community, because I think that will be even more powerful and impactful, because you've got different city leaders and business owners and whatnot that are going to come in and speak, and then we can physically go see the projects and touch them and walk them and talk to the developers and the lenders and everyone who's part of that. And I think that to me is very exciting to be able to start this in your hometown.
Yeah, I appreciate your, the willingness to do it here because Louisville is a great community. Obviously, I'm part of it. I've been part of it since 2017. It's become my home, and I'm really passionate about making sure that the projects we take on locally can be of benefit to the community going forward. And to your point, I mean, we have people coming in from all across the region, which is going to be beneficial for those who attend, because you get an opportunity to talk to people who are doing things at the street level, right? They're practitioners themselves. I can't tell you how many times I've had conversations with people in other markets that are doing cool things, and it creates like a trickle of an idea in my head. It's like, oh wow, they're doing this thing. Like, I wonder if maybe we can maybe apply it locally, or even if it's not necessarily that project, but maybe a unique approach that they took with communicating with a property owner, or different ways that they coordinated with a certain local official to try to help with certain things regarding entitlements. I mean, all different types of ideas that can be shared in a setting like this where you have people that are actually doing business. And so I'm
That
really
just
excited.
reminded me too. I think we had Luke from Ohio on, and he was talking about how he had not only his lenders come out, because in smaller markets you've got a handful of regional lenders, and yeah, we talk to our person who helps us get the loan, but very rarely do we interact with the underwriters themselves who are doing it. And he actually just said, "Guys, let's open book, let's workshop this. We're going to have your underwriters out as well."
Hmm.
And that was incredibly helpful. And now I'm like, okay. So, and that gave me ideas for future projects when you run into certain roadblocks. Like, our relationships with the lenders need to go a step further and a step deeper. And probably would have never had that thought cross my mind. I would have tried to make all the upfront and the salespeople type relationships, but never would have thought that we could or should get to the underwriters.
Hmm. Oh yeah. No, I mean, ultimately they're the ones who kind of nitpick and try to determine whether or not an opportunity is worth to pursue. But to your point, if you have that level of understanding about what the lenders are looking for, it makes it easier for you to be able to get these deals done, because you're not just shooting in the dark. You kind of have a lot of the stuff already ironed out, so that when you present your package to the bank, they're like, okay,
And
you've
the
got all eyes.
underwriter, when they see that come through, they don't just see the papers and the numbers. They're like, "Oh, there was a human that I talked to. There was a
Yeah.
human
Oh,
that now
absolutely.
that will factor into my decision of, okay." Because they're all betting on us. Everyone who is agreeing to be part of a development project is betting on you, the developer, to
Hmm.
execute.
Well, because you're presenting a business plan, and that business plan has to be executed. So, I mean, I could write it on a piece of paper, I'll do this, but unless I'm able to do it, unless they believe that you can actually take on the responsibility and make it happen, then it's not worth the paper it's written on. And so, what people fail to understand oftentimes is it's still a people business. It's like you have to have faith in the person that you're ultimately betting on, which the bank's betting on you, or other key stakeholders are betting on you to be able to execute what the vision is. And again, that takes partnership, that takes teamwork, and it takes faith, and especially the beginning where you don't have a track record. I mean, a lot of it is just, hey, it seems like this person's credible, but let's just give them a shot, especially, so I don't know.
Well, and that's a great point too. So everyone who's coming to the meetup has a different story on how they got started and how they got into partnerships. And I just started thinking through a couple of the people who are going to be speaking, and I'm like, yeah, their stories are amazing, and it's going to help so many people who are there to go, oh, that's how you got in. Oh,
Mhm.
okay, that's the relationship, that's the connection. Because yeah, it's so inspiring to go, because partnerships can be daunting, but at the same time, when you pick the right partner and you get in there, they can be some of the best projects and things. Because it doesn't matter what company. I never understood why it's like, why shouldn't we do business with friends and family? Like, why would we make other people successful and better off when it could be our friends and family, if the proper expectations and stuff is laid out to where it's the right people who are going in. So yeah, all of those perspectives are going to be so awesome. Yeah, the people, the firepower that's in that room, but just hearing where they started, it's just like the stories that we just said at the beginning. We did not all just wake up one day and go, boom, we're doing these crazy things that are transforming our communities. It was one step at a time.
Yeah. No, I couldn't agree more. And the goal with this is for this to be the first of many. So we're obviously going to have more of these conference or more of these meetups and events throughout the year around the country to showcase all the cool things that the listeners are doing, that the people that are part of this community are doing. And the hope is it becomes literally the watering hole for
Yes.
people who are wanting to do or are practitioners of real estate development. So yeah, we're just excited to be part of that movement. And if you guys haven't already, definitely buy your tickets. We have we'll make sure to include that in the show notes so you guys are able to access that. We are, it is booking up, so just make sure to buy your ticket before it's all gone. And we obviously appreciate all your support, and we look forward to meeting you guys here in Louisville at the end of August.
Awesome. Yeah, we will see you guys there. We are very excited.
Thanks.